Most investors lose money because they overcomplicate what should be simple. They jump from stock to stock, try to predict market crashes, and follow market gurus only to end up with more losses than profits. But what if I told you there's a strategy that can put you ahead of 99% of investors? Peter Lynch, one of the greatest names in financial market history, built his fortune using an incredibly simple methadone that anyone can follow. The secret? Invest in what you know. Lynch proved that any ordinary investor without an economics degree or insider information can outperform even the biggest Wall Street funds. He used this strategy to turn the Fidelity Magellan Fund into one of the most successful funds in history. And the best part? You can apply this method today to grow your wealth safely and consistently. In this video, we'll explore how Peter Lynch picked winning stocks, avoided pitfalls, and achieved outstanding returns over time. You'll discover why most people lose money in the stock market and how to avoid these mistakes. So, if you want to learn how to invest wisely and build real wealth, stick with me until the end. Have you ever noticed that most investors struggle in the stock market, buying and selling aimlessly, while a small group seems to have the golden touch? The truth is, you don't need a degree in economics or insider information to outperform 99% of investors. In fact, the key to success is already within your reach. You just need to use it. Peter Lynch, one of the greatest investors in history, turned an ordinary fund into the most profitable one in the world simply by following a strategy that anyone can apply. No magic formulas, no Wall Street tricks, just observation and common sense. In this video, you'll find out exactly how he did it, and, most importantly, how you can replicate this method in your own portfolio. So, if you're tired of blind bets and want to finally invest wisely, stay with me until the end. What you'll learn here can change your financial future forever. Many people believe that investing in the stock market is like gambling pure luck. But the truth is, each of us has natural advantages that could help us make better decisions. The problem? Most people don't even realize it. Instead of using their everyday knowledge to spot good opportunities, they buy stocks randomly, based on third-party tips or whatever is trending at the moment. And the result? Frustration and losses. If you already work in a specific industry or regularly use certain products and services, you're ahead of most investors. You spot trends before the market does, notice shifts in consumer behavior, and can identify promising companies before Wall Street catches on. Peter Lynch always emphasized this: the average investor has a huge advantage over professionals if they know how to use it. Unfortunately, most people ignore this advantage. Instead of analyzing companies that are part of their daily lives, they invest based on predictions or hot tips, as if they were picking a random number at a roulette table. Investing without knowledge is like playing cards without looking at your own hand. It might work once in a while, but in the long run, your chances of winning are slim. Peter Lynch didn't just make a fortune in the stock market, he also taught millions of investors how to do the same. During his 13 years managing the Fidelity Magellan Fund, he turned it into the biggest and most successful fund in the world. His performance was outstanding, an average annual return of nearly 30%, outperforming most professional investors. But what truly set him apart wasn't just his analytical skills, it was his simple and accessible approach. Unlike many fund managers who overcomplicate investing with technical jargon and complex mathematical models, Lynch believed that anyone could pick great stocks as long as they knew what they were doing. He popularized the idea that everyday investors could outperform the professionals simply by paying attention to the world around them. And it was this philosophy that he shared in his books, such as One Up on Wall Street and Beating the Street, which remain must-reads for anyone looking to understand the market. His biggest edge? Investing in what he knew. He observed everyday businesses, evaluated products gaining traction in the market, and sought out solid companies with consistent growth. Instead of trying to predict crashes or worrying about short-term noise, Lynch focused on what truly mattered: businesses and their results. His success didn't come from luck, but from a clear, repeatable strategy that any investor could adopt if they were willing to learn. Peter Lynch always insisted that investing doesn't have to be complicated. His philosophy was built on a simple yet extremely powerful concept: invest in companies you know and understand. If you already use a product or service and notice that it's high quality and gaining popularity, why not consider investing in that company? This is exactly how Lynch discovered many of his best-performing stocks, such as Dunkin' Donuts, Walmart, and La Quinta Motels. Instead of getting lost in charts and forecasts, he paid attention to the real world. This method has a clear logic. Everyday consumers often spot trends before Wall Street analysts do. If a new restaurant is always packed, a product is flying off the shelves, or an app is going viral, chances are the company behind it is growing. Lynch believed these signals were valuable and that anyone could use them to find great investment opportunities. After all, if a product has already won you over, it's likely to win over millions of other consumers too. But Lynch didn't stop there. He combined real-world observations with careful analysis of a company's fundamentals. Beyond a popular product, he wanted to see growing profits, manageable debt, and a solid management track record. In other words, liking a brand wasn't enough. He had to be sure the company was financially healthy. This approach blended intuition with rational analysis, making it one of the most effective strategies for long-term investing while minimizing risks. In the 1980s, many people started investing in the stock market with hopes of getting rich quickly. The problem? Most had no plan. They bought stocks as if they were gambling in a casino, picking companies without studying their fundamentals. When prices dropped, they panicked and sold, racking up losses. Instead of investing wisely, they ended up only making brokers richer, as they earned commissions on every trade. Lynch always warned that this impulsive approach was a recipe for failure. He saw investors constantly changing strategies based on headlines, trying to predict crashes or jumping from one stock to another. In the end, they built nothing solid. The secret, according to him, was to buy good companies and hold on to them for many years, allowing the company's profits to drive the stock price higher. Patience always beats market anxiety. If you want to succeed in the stock market, you need to avoid these classic mistakes. Instead of acting on impulse, follow a clear method. Choose solid companies, study their numbers, buy with a long-term perspective, and avoid unnecessary trades. This reduces risk and keeps you from falling into the traps of high fees and bad predictions. In the market, those with a plan always outperform those who improvise. A lot of people try to guess where the market is headed. Will there be a recession? Are interest rates going up? Is inflation about to skyrocket? But even the biggest experts can't predict these things accurately. Alan Greenspan, who led the Federal Reserve, frequently got his forecasts wrong. If even he, with access to privileged information, made mistakes, why would an average investor think they can predict the future of the economy? Peter Lynch believed that spending time trying to anticipate the market was a waste of energy. A true investor doesn't need to worry about whether a crisis or an economic boom is coming. The focus should be on the fundamentals of companies because, in the long run, profits are what drive stock prices up. If you invest in good businesses, it won't matter if the market fluctuates because these companies will continue growing and generating value. So instead of wasting time reading sensationalist headlines and trying to predict the next financial crash, do what Lynch recommends: invest in solid companies and hold on to your stocks for years. The market will always have ups and downs, but disciplined investors who follow a strategy and ignore the noise are the ones who truly build wealth. Imagine you work in the technology sector and have a good understanding of which companies are innovating and growing. Why not invest in them? Peter Lynch argued that the best investment opportunities are all around you, in your daily life. If you frequently visit a restaurant that's always packed and expanding, that might be an interesting stock to analyze. Investing in what you understand reduces risks and increases your chances of success. You don't need to be an economics genius to find great stocks. Many wealthy individuals built their fortunes by investing in simple but solid businesses. Lynch always emphasized that people working in a specific industry have a natural advantage over Wall Street analysts because they spot trends before they become obvious. The key is to observe what's working and study the company's financials. Moreover, you don't need to invest in dozens of companies to achieve great returns. Lynch believed that a few well-chosen stocks could transform your financial future. If you identify a promising business and invest in it before the market realizes its potential, you could multiply your money without relying on complicated predictions or elaborate strategies. If investing in what you know sounds too simple, that's because it really is, and it works. To prove this, Peter Lynch shared the case of a group of elementary school students who, with no financial experience, outperformed the market by more than 3 times. How? They analyzed companies they knew and used daily, like fast food chains and popular clothing brands. While many experienced investors overcomplicated their strategies, these kids applied the basics and won. Another interesting example comes from amateur investment clubs in the 1980s. Small groups of friends and family members with no background in economics achieved better returns than some of Wall Street's biggest funds. Their secret? They followed simple principles, investing in what they knew, studying company fundamentals, and holding on to their investments for the long term. Instead of trying to predict crashes or constantly buying and selling, they focused on the steady growth of the businesses they picked. These examples show that you don't need to be an expert to succeed in the stock market. With a little research and observation, anyone can find great investment opportunities. The key is patience, confidence in your own knowledge, and resisting the urge to follow the herd. In the end, the market rewards those who understand what they're doing and stick to a consistent strategy. After years of dominating the market and turning the Fidelity Magellan Fund into one of the most successful funds in history, Peter Lynch made a surprising decision. He retired at just 46 years old. While many fund managers spent decades chasing returns, he chose a different path. To Lynch, money wasn't the only goal. He wanted to enjoy life, spend more time with his family, and give back to society. After all, what's the point of building wealth if you can't enjoy it? Away from the financial world, Lynch dedicated himself to philanthropy and education. He invested time and resources in projects focused on schools, libraries, and affordable housing, helping to create opportunities for thousands of people. This commitment to social impact reinforces a key belief he always stood by. True success isn't just about making money, but about what you do with it. He proved that a smart investor doesn't just build wealth, they also use it for good. His retirement teaches a valuable lesson. Investing wisely isn't just about growing your money, but about gaining the freedom to choose what to do with your life. Whether it's achieving financial independence, helping others, or simply having more time for your family, the stock market can be a powerful tool to get there. But as Lynch showed, the key is always keeping your focus on what truly matters. Throughout this video, you've seen how Peter Lynch built his fortune by investing in a simple and intelligent way. Instead of trying to predict the future or follow the crowd, he focused on what truly matters: solid companies, consistent growth, and paying attention to what was already around him. And the best part? You can start applying this strategy today. Now, tell me, have you been using your natural advantages when investing, or are you still falling into the market's traps? Think about it and reflect on how you can improve your approach. Start by observing the products and services you use daily. And ask yourself, does this company have the potential to grow? Small adjustments can make a huge difference in the long run. If this content helped you, don't forget to subscribe to the channel, turn on notifications, and leave a like. That way, you won't miss any upcoming videos on investments and financial prosperity. And of course, share this video with someone who needs to learn how to invest smarter. See you in the next video.